Hey everybody.
Sean and Kelly here, Price and Price Group of eXp Realty. What are we talking about today?
Today, it's Friday the 13th, so we're gonna make sure that we bring a topic to the table that I have a really great horror story for.
Oh, right. Here we go.
We're talking about title insurance. Is it a
scam or a necessity? All right, and we got a horror story, huh?
Oh,
All right,
yeah.
let's get to it.
Okay, so title insurance, let's talk about it.
First
What's
of all,
the title search process, right? Like,
Yep.
what do they do? What even is title insurance and a title search? Why are they a part of your real estate transaction?
All right, so we're speaking from the buyer side.
Mm-hmm.
And what happens is when you purchase a home, the title gets transferred into your name. The title is the ownership of the property.
Mm-hmm.
So if there is a lien against the property, it's going to go against that title. If there is some kind of a judgment or a boundary issue, if there's anything that comes up, that is going to affect the title and affect the marketability of the title.
That's right. When you buy the house and you buy everything that comes along with the house, right? So
Yep.
all of these things that you just mentioned, you're getting that too. So this is why it's very important that they run a title search when you're in the process, because, well, for that reason you'd be out, right? I mean, you wouldn't want to buy the house until it was had clear title is what the goal is.
Yeah, because if you bought a house and you accepted, let's say, a lien from, say, the IRS for $50,000, that lien now becomes your lien, and you won't be able to sell the property. And if you have a lender involved, the lender's not going to let you buy a house with a lien against it. So the title search is the process of making sure that that title is clear all the way through the process, okay? So then that brings up the next question. Why would there be a need for title insurance if the title search has already been done?
Right. Is it required? Is title insurance a requirement?
Yeah.
Right?
Yeah.
So we have two answers for that.
Yep.
The lender, if you have the lender involved like you were talking about, 100%, there are two different policies. The lender does require you to have and maintain a lender's policy because they're protecting their asset, right?
Yeah, they're protecting because there may be something that comes up in the future against that title, even if it has a clear title, which we're going to give you a horrible
You just
horror
alluded
story.
to the horror story.
It's fantastic.
It's going to give you shivers and chills.
It's going to fear, yes.
Great.
Okay, so the lender's
And it happened
policy,
right down the street. So this is like actual factual.
Yes,
and I
true
can't wait.
story. Yeah, so lender's title insurance is required because they have to protect the asset that they're living on.
Yeah.
Homeowners.
So the owner's policy, right? You'll see on your Alta or HUD statement, it says optional.
Yep.
It is not required.
Yeah, it is not required. And there are two options. There is the standard and the expanded. What's the
I think it's expanded or
they use different language, but there's the standard and then there's a higher level one. So those two are absolutely optional for the buyer. So we get questions. In fact, the reason for this video is we had two buyers ask us yesterday, should we buy title insurance?
Yes.
So we're going to give you our opinion, which is that where we're at now.
Is it time for the opinion?
Okay.
So Sean.
Yes.
What do you think? Is it necessary to buy an owner's policy, which is going to be what? A couple to $3,000.
Yeah, a couple to $3,000.
That was a couple to three, not a couple to 30. I think my lip did a couple to three.
It does.
Three, a couple to $3,000.
Yes, and it does depend on the size of the transaction. So obviously a higher one
and
can
your
be more.
title company, right?
And so on. Exactly. Yeah. So my opinion is 100% of the time, you absolutely get title insurance. What's your opinion?
Now I think, and this may come as a surprise, I totally agree with you.
Yes, you got one. High five.
Yes, always get your title insurance, owner's policy, get title insurance, and here's why.
Well, let me throw this out there real quick.
Oh man.
We have no financial incentive to tell you to get title insurance. We do not own a title company. We do not get paid based on, this is only from experience of seeing what some of our clients have gone through.
Yes.
And
what we've done ourselves always.
What we've done. It's a one-time fee. It covers you for life. And you're going to see in this horror story why that is so important.
Okay, but now I'm going to hold you off for a second because I think you left a great tiny little open window for me to point out that there are rules in place that protect you, the consumer, our clients, from being hoodwinked and swindled by us being in bed with with the lenders and the title insurance and the inspectors. When we recommend someone, we have no financial
financial
gain at all.
That's
Like
right.
even if let's say we had an investment in a title company, we would have to give you disclosures that said, hey,
Yep.
we have all this. So you don't have to worry about that.
There's no ulterior motive here.
That's correct.
Yeah. Okay.
No
So
ulterior. Yeah.
this horror story. Now this is something I'm going to paint the scene. Do you mind?
Yes,
You'll get into
please.
the
You
details.
paint the scene.
We had a client. They put this home under contract. It was over $3 million.
Yes.
We were 20 days into a 30-day transaction.
This client, by the way,
Mhm.
was across country in
Yes.
California with dogs and children and spouse.
And everything being shipped to their new home. They had spent hundreds of thousands of dollars of furniture, custom furniture for their new home.
For this home.
We are 20 days into this transaction, going to
So
settle in 10
it's
days.
happening. Like the
Yes.
dog is being
Yep. All
loaded up.
contingencies
And,
are expired.
yeah.
And we get a call from the seller's agent that there has now been a claim put against the title on that property. This is not something that came up in the title search. This was somebody suing to have claim on that property. Now here's the kicker. Wait till you hear the details about this.
Okay. So our story begins back in 1997.
The 1900s. Ooh,
1997.
black
This
and
is
white
the year
film.
I graduated high school, right? I think I had my very first cell phone, right? Back that. Okay. 1997. We're not using the actual names here.
Yes.
Bob Seeger and wife owned this piece of land just down the road from us.
Down the block from us. Yep.
I think they paid $280,000 for
1997.
piece of land, 1997.
3/4 of an acre.
Now this is on, so what, once we get right there, it's Mclean, right?
So it's Mclean
So
Great
it's
Falls.
Mclean, so there
Yep.
it is.
Yep. So that shows you the value of the lots back then.
1997.
Yes.
In 2014, he transferred this into
An entity.
business entity,
Yep.
right?
So Bob Seeger and his wife.
They transferred it into a business entity, and wife, Cheryl, well, she gave a quitclaim deed.
Yep.
So tell us what a quitclaim deed is.
So a quitclaim deed is a quick document that basically, instead of like going through a foreclosure process or anything, it's where you can just sign this document and give over the rights to your property. So she signed a quitclaim deed.
And this is quit, like
Quit.
I'm quitting on you,
Yeah, I'm
right?
quitting.
Like
I'm quitting my claim to this property.
Yes.
So she signed this quitclaim deed to give her husband Bob the right to
Yes.
move this property into the name of an entity. So Bob, what was her name?
Cheryl.
Cheryl, I couldn't remember which name. Bob and Cheryl, after they move into this entity, no longer own that property. It is
Yeah.
now an entity that owns the property. Bob and Cheryl
Yes.
are out. There's no money in that transaction. It's just a name change.
Yes.
Okay.
Okay. In 2016, just 2 years later, that entity
Mhm.
that then owned it
We'll call it
sold it.
BS Co. Oh, that was a C. Never mind. It's Cheryl with an S. Yeah, BS Co.
Okay. BS Co. entity sold it to a builder. This was
No,
to.
that was just a company.
I'm sorry. Sold it to company A
Yep.
for $700,000. So they had it for $280,000 in 1997. Now it's a business, still theirs. They sold it for $700,000 in 2016.
So now Bob and Cheryl have walked away with $700,000.
Correct.
Okay.
And now company A
Mhm.
owns it, right?
Yep.
Company A then sells it to a builder 1 year later in 2017 for $1,080,000.
Okay.
So they also made quite
Some
a
money,
handy
yeah.
profit, right? In just a year.
So company A has now transferred ownership and they took their money and they're gone.
Yes.
So now the builder
So
owns
now
it.
the builder has this property they bought
Yep.
in 2017
Yep.
for just over $1 million.
This is still vacant land at this point.
Yes, this was just a lot,
Yep,
right?
Yep.
They held on to it, and in 2021, they sold it. You would know the name to a pro bowler, let's say. I only just learned that like a pro bowler has nothing to do with bowling. Like they don't bowl. Like this is, I'm like, what the heck?
So we're watching Special Forces and Des Bryant, and it said NFL Pro Bowler, and Kelly's like,
I'm like, he doesn't look like any
He doesn't look
bowler
like a
I've ever
bowler.
met.
So anyway, so the home was sold to this Pro Bowler. We will not say
Yes,
names.
this pro bowler in 2021 for $2,950,000.
Okay, so this house is now, or this piece of property has now gone from $280,000 up to $2.95 million with a brand new house on it. Okay.
Everybody's getting title insurance.
Everybody's getting title insurance.
Okay.
Everybody's closing the transaction. Everything is clear. Title is clear on all the searches. So
Right.
legit transactions.
Pro bowler would not, number one, buy a property that didn't have clear title,
Yep.
and number two, would not get title insurance,
Right.
right? So of course he does.
Yep.
So then this pro bowler, well, his
finished.
Achilles tendon got whacked off.
That's not what happened, but good. He got hurt, so he's gone. He's leaving.
Okay. In just a year, right? So in 2022, they're like, oh man, my dang Achilles tendon. It's like all jacked up and stuff. I don't want to be here anymore. We're going to go somewhere else. So they listed it. Enter our clients.
Yeah, so our clients put an offer in for
California,
over $3 million.
They love this. Over $3 million, blah, blah, blah. We go through the whole thing. Again, as you set up, they are moving. Their stuff is in the truck.
Yes, they have furniture being delivered. Day 20, we get a notice that Cheryl...
This is the wife from years and years and years ago, the one that filed who filed the quitclaim deed.
3 owners ago that filed the quitclaim deed claims she never signed that document.
She's like, wait a minute, I still own rights to that
this property that's now on sale for $3 million.
And I want my piece. I never signed that kind of document. So the title company, these are attorneys, right?
Yes.
They're made of attorneys and processors and all this. They're like, okay, so we're gonna get to the bottom of this. Of course, Pro Bowler has title insurance.
Yep.
That doesn't mean anything for our clients, right? What title insurance does for Pro Bowler means if they don't have a happy resolution, they cash him out and give him the money for the property, right?
Yep.
So he's fine. That's what happens to you when you have title insurance.
And title insurance is covering all of his legal fees. We are now towards the end of 2023. That property has been rented twice because it's still in dispute.
Yes. So let's say this was not a happy ending.
It has not ended yet. Yeah.
Like, okay, so our clients, we had to find them another house and close within 10 days. Luckily, that was a cash deal. Sure as all shenanigans, they are getting title insurance on every property they own because now they have like, oh wow, this can happen.
Yep. Pro Bowler is still battling.
Pro Bowler is still battling, but has been made good on because he had title insurance.
Well, he will be made good. Yeah. So here's the potential outcomes. Right. The legal battle happens. They find Cheryl does not actually own the property, which means that Pro Bowler gets the property. Now he can sell the property and everything is fine. Mm-hmm. And all of his legal expenses have been covered because he got the expanded title insurance.
Right.
The lower level wouldn't have covered all this. If Pro Bowler does not prevail and Cheryl does win the property, Cheryl gets the property, gets the $3 million house, has all rights to the property. She may even be suing the other people in the transaction.
Right.
We don't know about that because they technically, if it's her property, never had the right to sell the property.
Yeah, something they should
So
have
if
done.
any of those guys don't have title insurance, they've got a whole world of hurt on them. And Pro Bowler, because he has title insurance, will be made whole. He will receive payment for the value of the house.
In the meantime, what you were saying is they're leasing it, right?
Yeah.
I think it's leasing for $15,000 a month or something like that.
Yeah.
Which she may, if they find that there were whispers that that wasn't a real signature on that quitclaim deed. So if it is found out that she never really signed that away, it could be maybe does she get part of the rent money? Yeah. Does she get who knows? That's not our jobs to know. Our job is to tell you get title insurance every single time.
He probably paid $3,000 for his title insurance, and it's a $3 million transaction. Now, 99% of the time, that $3,000, it's just a safety net. But this is 4 transactions down. If you get title insurance, you keep your documentation, you keep it for life, because even if that property sells 5 or 6 transactions, somewhere in that chain of title, you could get sued by somebody who may have a claim on that property.
Right.
So, my opinion, yes, get title insurance.
It doesn't matter. It doesn't matter if you're a Pro Bowler or not. I mean, it doesn't matter what you paid for your house. If you have an $80,000 house and wherever you are, I don't know if we can in our backyard, right? It doesn't matter. Get your title insurance. Yeah. Protect your investment. Every investment is your investment. It's important to you, and you need to protect it.
Yeah.
Right?
And it's lifelong protection, one-time payment. So, yes, that is our story. That is our horror story. Get title insurance.
And we both agree.
I'll see if I can do a little ding. All right, so let's get to the numbers and the graphs. You're going to be shocked at what happened this week. We took a pretty significant move What does it mean? Well, we'll get to the graphs and find out. And then after that, we'll get to Tatiana's Mortgage Minute.
Yay.
All right. Okay, so apologies for the atmosphere being different. I am at an open house. I wanted to go ahead and get this video shot very quickly though, so you guys would have this information as quickly as possible. So let's just dive into the graphs. There's been a change here, and I think this might be a little bit of an opportunity for you as a buyer for a small period of time. So like I said, let's dive into this. Okay, let me get my pen here. All right, so as always, buyer activity is our orange line and inventory is our blue line. So you could see over the last 2 weeks, 3 weeks, that inventory has been dropping steadily. Buyer activity was dropping along with it just because there was no inventory. And even with the lower inventory, last week buyer activity went up even though inventory dropped again. So where's the opportunity that I'm speaking of? Well, you can see this last 7 days, inventory spiked, okay? Not significantly, but it went up. Buyer activity took a significant drop. Now, what do I think is causing this buyer activity to drop? I think that the cause of the drop is that the interest rates went up again just a little bit, but I think the big cause of the drop was the Israel situation. We saw this when Russia first attacked Ukraine. There was a drop in buyer activity for a couple weeks because everybody started getting a little bit nervous, like what's going to happen with the market. So I have a feeling what's going to end up happening is we might have a small little week, maybe 2 weeks of a window where buyer activity might be a little bit low compared to inventory, where buyers might have an opportunity to get a property without as much competition. Does that mean that you're going to get a discount? It does not mean you're going to get a discount. If the property is priced appropriately, you're still going to have to pay market value, but you could get it without facing so many multiple offers, or without having to give up all your contingencies. I don't think the market's about to drop. In fact, I think that there will be a rebound effect, and I think prices are going to continue to escalate. And the demand is still there, but I think there's just a small window of less competition. For example, before starting this open house, I went and showed 3 properties, and all 3 of them had multiple visitors at the same time. So the demand is still there, but again, I think that there's a small opportunity that maybe you're not going to face as much competition over the next couple of weeks. So if you're a buyer, don't sit back. Don't pass up this opportunity. Go ahead and get out and start looking for the next couple of weeks. If you're a seller, inventory is still historically low. You can see, where the inventory level is compared to these areas here. So it's in a higher area, but it's still very, very low. This is where it was last year, and it's still low compared to what it was last year. Buyer activity has been higher than it was last year. So we still need inventory on the market. Maybe wait a week or 2, maybe. I don't know. We'll see how it happens. I've got a new listing that just went on the market, and we're still getting a lot of traffic, but it's appropriately priced and it's in great condition. So let's just have a conversation. If you're looking to sell, let's have a conversation about your situation personally. If you're looking to buy, get in touch with your agent. If you're one of our clients, call us now. We're going to be on the phone calling buyers to be taking advantage of this potential situation over the next week or 2. Okay, if you have any questions, let us know. Please like us and subscribe. And let's get over to Tatiana for Mortgage Minute. Okay,
hello,
so
everyone.
What's that?
I said hi.
All right, well, we got Tatiana here for this week's Mortgage Minute. All right, catch us up. What's going on with the interest rates?
Hey guys. Yeah, so let me actually start with the chart for the interest rates. So we can talk a little bit about that. Let me share my screen. Hold on.
Yeah, and while you're sharing, I saw, what was it? I think when I was at the gym today, I saw on one of the faraway TVs, they said that the feds may be considering possibly lowering the rates at the end of the year. So have you heard anything about that?
Yeah, so there are talks about that. Some professional financial institutions thinking that it could happen just because inflation is going down, and basically the increasing the prime rate by Fed created this inflation to go down. That's in their opinion. So it is possible that they might lower the rate, or maybe they'll just keep it the same.
Okay.
But can you see my screen?
Yes.
Yes.
It's nice and big. You can see. Yeah. So Freddie Mac's chief economist Sam Hatter said that for the fifth week, consecutive week, mortgage rates rose as ongoing market and geopolitical uncertainties continues to increase. So you can see that interest rate went from 7.49% from last week to 7.57. That's according the sources, the Freddie Mac's primary mortgage market survey. So, however, it looks like inflation, just like it said, is moving in the right direction. And the latest consumer price index report shows a promising trend with core inflation currently at 4.1%. And that's a significant dip from last year, 6.3%.
Okay.
So the prognosis, Fannie Mae and mortgage bankers associates predict that mortgage rates will fall next year.
Okay.
But they disagree about the fourth quarter in 2023. So if you can see on this chart, Fannie is thinking that rate is going to still stay around 7%, when MBA thinking it's going to be 0.6, 0.3. But, first quarter and second quarter of 2024, they're predicting rates to go down. MBA is more optimistic about the rates. We'll see what happens. It's interesting it's unprecedented times, and it's really hard to predict what's going to happen.
It's crazy because it seems like, week by week, the prognosis and the forecast changes. So last week, it's like they're going to hold, they're going to go up, it's going to go into the end of for 2024. And then, 3 weeks before that, it was like, we're going to be going down in Q. So it's really just, the truth is nobody really knows.
It's all over. And whatever it was that I was looking at this morning, they even used the R word. They're like, because they might be worried about a recession. And I'm like, wait a minute. We've
been in a recession.
We're worried about inflation, like what's going on, right?
Yeah.
Okay. So you've got Fannie Mae here.
And NBA, and then you were talking about Freddie Mac, and we get this question all the time with people who are just going into the home buying process, and they're Googling everything about rates, and they're like, I just don't understand with Fannie and Freddie and whoever else. And so who even are Fannie Mae and Freddie Mac? Can you give us the lowdown on that?
I can. So let's see. So Fannie Mae and Freddie Mac are two government-sponsored enterprises in the United States. They were created to help make home ownership more affordable and acceptable for people. So Fannie Mae stands for Federal National Mortgage Association.
Okay.
And Freddie Mac stands for Federal Home Loan Mortgage Corporation.
Okay.
So they both very similar and in the way they work. And so let's just see. Let's say the person is looking to buy a home.
Okay.
To obtain a mortgage from a bank or other lender.
Okay.
Let's say they get 30-year fixed mortgage, which helps borrower to lock in a fixed, relatively low payment, and is one of the most popular options in the US, right? So they get in a mortgage from the bank, and then Fannie Mae or Freddie Mac buy mortgages from the lender, which frees up funds for the banks to originate new mortgages.
Okay.
The loans that Fannie and Freddie then will purchase must meet a certain characteristics, and cannot exceed certain sizes. So that's why all the lenders have to follow their guidelines. So at the end, after they close the deal and they sell loans to Fannie and Freddie, the Fannie and Freddie would actually buy those loans because they are the ones who are dictating the guidelines and certain characteristics of that loans has to meet for them to buy that loan.
Okay.
So then Fannie and Freddie can keep those mortgages on their books and collect interest on loans. But most often they will just package a number of mortgages into mortgage-backed securities that can be sold back to banks or other investors. So Fannie Mae and Freddie Mac would guarantee payments on those securities, even if home buyers will default.
So they're like the middleman and like an insurance policy.
Exactly. So, and then the guarantees from Fannie and Freddie have made those securities popular with investors, who would see the safety, they would see them as a safe investments, pretty much.
Okay.
So that's
and they both Fannie Mae and Freddie Mac do the same thing.
So the Freddie Mac and exactly. So they very similar. They have some differences in the guidelines. So lenders, they know those differences, and sometimes I originate the loan, I send it through the Fannie or I send it through the Freddie Mac, but in most cases they go hand in hand. They're very similar with similar guidelines. So they basically, in summary, these organizations are to help to make it easier for people to get home mortgage and then buy from the loans by buying mortgages from lenders and providing more funds to the housing market, right? So the difference between Fannie and Freddie, besides the guidelines, like some very small differences in the guidelines, in general, Fannie tends to buy loans from larger commercial banks and lenders, and Freddie Mac usually buys loans from smaller banks or credit unions. But this is the primary difference between those two, and it doesn't really affect an actual buyer in any way.
Interesting. Very good. That's very clear.
That's very clear. So I think this is a really great illustration to show people that, the lender that they choose offers up these different programs, right, Tatiana? So if I'm a buyer and I'm coming to you and I give you the scenario, I want to buy this house and this is my credit and this is my income, and you give me my options, you're giving options based on, do I fit into Fannie Mae or Freddie Mac criteria, and maybe any other investors that you work with. That's where you're giving me my options from, as you're pulling from that pool.
Exactly. And it's important to know that about the guidelines and banks overlays. So what's banks overlay? Basically, every bank, like I said, they have to follow Fannie and Freddie's rules and guidelines, but they could impose overlays, meaning they put more strict guidelines. Just let's say Fannie and Freddie say the minimum credit score is 620 for us to buy the loan, and the bank is gonna say, we're going to make it 640. We're going to make it more stringent. And that's important to know that, credit unions and some big banks, they do put those overlays. So it could potentially make it a little bit harder for buyer to get conventional loan versus direct lenders like Prosperity Home Mortgage that we work directly with Fannie and Freddie. We know their guidelines, we follow their guidelines. And in some cases, I know I might not be able to get this person approved under Fannie, but I can get them approved under Freddie Mac. And the rates are identical, they're exactly the same. But in some cases, I can get the loan done through one or another. So that flexibility and knowledge is very important, because it just helps a person to get a mortgage,
I
basically.
think that's a
Yeah.
really good point, is that not all lenders are direct lenders from those GSEs, right?
Exactly.
Not all of them are.
Okay, explain GSE.
That's the government, GSE, government something entity, government
Yeah.
sponsored entity,
Yes.
right? Or enterprise, yeah. And that's what Freddie Mac and Fannie Mae are. They're government sponsored. Okay. So here's another question of confusion we get. How is Fannie Mae different than FHA? A lot of people get those confused. So where does FHA fall into this whole situation?
So the FHA is Federal Housing Administration program and follows the HUD guidelines.
Okay.
So it's a
Completely
another
different.
Totally
story.
Yeah.
Okay, it's
yeah.
not a
Talk about
government sponsored entity then. It's not like a cousin of Fannie Mae and Freddie Mac, right? It's a totally different thing.
Well, I mean, you could call it a cousin, I guess, because at the end you get a mortgage from them as well. And
That's
in
true.
some cases, FHA is better option than conventional.
Okay.
And maybe it's actually going to be a good idea to talk about that.
I think
What
we
are the
should.
Yeah.
differences in which cases
Okay.
Okay.
it's better to go with one or another.
Okay.
But I
Okay.
guess it's different
I
days.
like that. I think that one time we need to talk about conventional, jumbo,
Mhm. All that
FHA,
Yep.
even, what is it, the USDA, VA, like, explain why all these,
Yep.
why. And everything.
Exactly.
We should do one of
Put it on the list.
Okay, I'm gonna add it to the list.
Tatiana's gonna make a PowerPoint the rest of her life. All right.
Okay,
I can make this
any other-
PowerPoint in 5 minutes now, it's just
There
like,
you go. We're making you're just like that. Yes.
We need AI for that. Hey AI, Chat GPT, I need you to create a PowerPoint on this, and it's just gonna do it.
That's right.
that's a good idea. Thank you.
All right. Well, do you have anything else? Or are you good?
I don't have anything else.
Okay. Okay. Well, thank you as always. And yeah, we will be back in touch with you next week and dive into our next mortgage minute.
Yeah, I hope everything's okay with your family.
Yeah, we'll be praying
Thank
for
you.
you.
Thank
Yeah.
you so much, guys.
All right. See you next week.
Bye.
Bye.
Bye.